Hi, I'm Alex Hanssen. I will be presenting on IMAX Corporation. First, we'll start with the history of the company. IMAX is a Canadian theater company that designs and manufactures IMAX camera and projection systems. They also perform film development, production, post-production, and distribution to IMAX theaters worldwide. It was founded in 1967 by three filmmakers, Graham Ferguson, Roman Kreuter, and Robert Kerr. They realized that new technology would be necessary to develop larger and more complex productions than what was currently around. They then hired an engineer named William Shaw. Shaw created a new projector that gave films exceptional quality and allowed the image to be 10 times larger than the traditional movies of the time. Once this new camera had been developed, they began to focus on making theaters with giant screens, surround sound, and stadium-style seating. Since its early beginnings, it has grown into a worldwide company with theaters in more than 66 countries all over the world. Now we'll move on to the industry and major competitors. So IMAX is a member of the movie and entertainment industry. And in regards to the movie theater industry, after a slight drop in 2014, the movie industry has rebounded and has had continued industry growth. In the coming years, it is forecasted to continue to increase and grow. The two biggest challenges the movie theater industry faces in getting people to head to the movie theaters is that tickets and concessions are too expensive and that customers are more pressed for time and want the movies brought to them rather than going out to see a movie. While the industry is threatened by movie streaming services, movie attendance remains strong, and the top theater groups continue to report revenue increases year after year. The main competitors to IMAX are not like traditional competitors. IMAX works with the two biggest movie theater companies, AMC and Regal Cinemas, all over the world. While they do have standalone theaters, most of the IMAX theaters are located in AMC or Regal Cinema theaters. The main competitors IMAX has are instead other digital production technology companies like RealD 3D and Dolby Cinema that offer premium cinema concepts like IMAX. One final competitor is the China film giant screen, which was created to try and break the IMAX monopoly in Chinese theaters. RealD has been acquired by Resv Traverse Management, an investment firm in California, but at this point it is not publicly traded. Dolby Laboratories owns the Dolby Cinemas and is publicly traded. It sells at a price of $51.53 with a PE ratio of 25.36. Now we'll move on to the annual report. In 2016, they had fourth quarter revenue of $106.9 million, and they had fourth quarter net income to shareholders of $8.9 million or 13 cents a share. And in 2016, they had full year revenue of $377.3 million, and full year net income to shareholders of $28.8 million or 42 cents a share. As compared to 2015, they had full year revenue of $373.8 million, which is less than 2016. But in 2015, they had full year net income to shareholders of $55.8 million or 78 cents a share, which is higher than in 2016. Moving on in the annual report, in the fourth quarter alone, they installed 70 new theaters and performed 3 upgrades. And in 2016 as a whole, they installed 164 new theaters and made 16 upgrades, as compared to 2015, where they had 136 new theaters and 18 upgrades. Also talked about in the annual report, they formed a partnership with Marvel and ABC to exclusively launch the first 2 episodes of the television series Marvel's Inhumans across the global IMAX network ahead of its premiere on ABC. After the first 2 episodes, it will be aired weekly on ABC. And they also took a giant step forward in establishing location-based virtual reality. And it's a new and innovative technology and content partnership that has a $50 million fund. They have opened a flagship pilot IMAX virtual reality center in Los Angeles, which has already had more than 70,000 unique satisfied visitors. They also signed agreements to open 5 new virtual reality pilot centers in China, the UK, and the US by year end. In 2016, the company repurchased 3,849,222 common shares under the company's repurchase program at an average price of $30.25 a share, and it was purchased for $116.5 million. Moving on to the financial analyst statements, Robert L. Harrington gave a financial analysis on the company on February 3rd, 2017. He reported that IMAX will likely post better top and bottom line growth in 2017. Last year was choppy but not uninspiring, while year-to-year comparisons hurt growth. But since IMAX has continued to make investments into its international expansion and technological offerings, improved performance is expected, including a likely new record for net shares. 2017 is expected to be a big year at the box office, which is expected to allow the company to deliver 14 to 15% top line growth. While other companies are trying to come up with their own supersized theaters, most companies prefer the best-in-class reputation of IMAX. For example, Regal has recently entered into an 11-screen contract extension. Harrington recommends that investors consider IMAX stock because long-term upside potential is above average. Moving on to a current event article. This article was from Barron's Asia, and it was titled IMAX China Stock Plummets, Buy on a Dip by Isabella Zhang. It was written on April 5th, 2017. So on April 5th, IMAX China shares plummeted 9%, and the reason for that was the two lead private equity investors sold a combined 5.9% of their stake to a prominent international investment bank. It was sold for $39.72 of Hong Kong dollars per share, and a 5% discount, which is a 5% discount from the 41.80 Hong Kong dollars per share, which it was trading at, and it now trades at $38.40 Hong Kong dollars. We now move on to the stock price. So this is the stock price graph for the past 5 years for IMAX. As you can see, they had a peak in 2015, and it dipped from there. And then at the end of 2016, going into 2017, when the earnings of 2016 were reported and they saw they weren't very high, there was another dip right around here. But since then, it's continued to grow, it's continued to rebound and stay between around $35 and $30 per share, and it currently trades at $33.60 a share. We now compare that to Dolby Laboratories. They had a high close to 2017 of around $60, but now it sells at $51.53. But it's important to keep in mind that for Dolby, they have a lot more than just their theaters. They have cameras, they have the audio systems, they have a lot of other things that affect it, and they're a more established company. But as you can see, they have continued to grow, and IMAX has also continued to grow. We now move on to top management. All the salaries are from 2015, but we start with Bradley J. Wexler, who's the chairman of the board, and he was compensated $469,000. Then we move on to Richard L. Gelfond, who's the CEO, and he was compensated $14.4 million. Greg Foster, who is the CEO of IMAX Entertainment and was the senior executive vice president of IMAX Corporation, he was compensated $4.4 million. Patrick McClymondt is the current CFO, but in 2015, Joseph Sparacio was the CFO, and he brought in $1.5 million. Also, two other important people, Jian Chen, who is the CEO of IMAX China, and Mark Welton is the president of IMAX Theaters. Moving on to PE ratios, dividend yields, bond ratings, and betas. IMAX Corporation is currently trading at a PE of 70.73, meaning many would consider it a growth stock. Because the PE is so high, many would consider the stock overpriced. The reason why it's so high is because the earnings per share aren't very high for the past year, so it made the PE very high because the stock price is so high relative to it. But the forward PE of the future is 31.96, meaning analysts are expecting earnings to increase, and that's to start to lower and get to a lower number. IMAX has never issued any dividends or bonds, so there's no data on that, but the raw beta for the company is 1.579 and the adjusted beta is 1.386. Those are both those numbers are over a beta of 1, which means it is expected to be more volatile than the market overall. And now we look at Dolby. Dolby has a PE of 25.51, which you can tell they had higher earnings relative to their price, which is why it's lower. They also have a lower PE of 21.30, but it's definitely not as drastic as the IMAX one. They have issued the last two dividends they issued. They were 14 cents per issue, and they've had a 1.02 12-month yield on their dividends. For their betas, they had a raw beta of 1.142 and an adjusted beta of 1.095, meaning it was slightly higher than the market overall, which means it's slightly more volatile, but it should follow pretty closely. Next, we move on to return on equity and capital structure. So the return on equity for the company was 4.9%. It has a market cap of $2,178.4 million, and they have cash equivalents of 204.8 and a total debt of 27.3. Now we move on to the growth rates for earnings per share, dividends per share, and book value per share. So this is for IMAX. The 5-year growth rate for earnings per share was 43%, and for the future growth rate for 2017 is projected at 36%. For 2018, it's projected for 28%. For 2019, it's at 28%. And for 2020, it's at 31%. As was mentioned earlier, they have not issued any dividends, so there isn't any data on that. But for book value per share, for the past 5 years, they're at a 52% growth rate, and in the future, they expect 2017 to be at 22% growth rate, 2018 at an 18% growth rate, 2019 at an 18% growth rate, and 2020 at a 16% growth rate. We now look at Dolby Laboratories' growth rate for earnings per share, dividends per share, and book value per share. Their earnings per share growth rate for 5 years was 34%, which is lower than IMAX's. And you can tell that their future growth rate earnings are much lower. For 2017, only 1%. For 2018, only 3%. For 2019, only 3%. And for 2020, only 6%. This is showing how much growth potential IMAX has as compared to this company. They haven't issued any dividends at this point, but there was a projection for 2020 and 2021 for if they were to issue shares. For 2020, it would be a 10% growth rate, and for 2021, it would be a 38% growth rate. Their book value per share is at 27%, much lower than the 82% for IMAX. And their growth rates are much lower as well, only 7% for 2017, 9% for 2018, 6% for 2019, and 7% for 2020. As compared to IMAX, they're much lower. So it's, again, falling in line with how it has the potential to grow and continue to make more money. Next, we move on to foreign exchange rate risk. So IMAX has put a very large focus on adding theaters to countries worldwide. So foreign exchange rate risk could have a very large impact. If they're putting theaters in countries all over the world, they're going to need to convert their money into that local currency to build it. So they're very susceptible to exchange rate risk. And even when the theaters are already built, the money they're generating could be valued at less with exchange rate risk. And moving on to global and political risk, the possible changes to NAFTA under Trump's administration could have effect on IMAX, but according to Steven Schwartzman, a Trump advisor, Canada shouldn't be too worried because Canada is held in high esteem and its two-way trade is balanced, and much of the changes to NAFTA are directed at Mexico, so Canada is just trying to prevent getting sideswiped by the changes that are meant for Mexico. So they're trying to do their best to stay out of the changes that Trump wants to make in regards to Mexico. So now moving on to the analysis. It has a high PE of 70.73, showing that the stock price is high compared to their earnings per share, but it is trading so high because of its potential. The reason why the shares are still, the price is still that high, is because people know that it could succeed and it has a chance to grow, even though the return hasn't been as high. But the forward PE is 31.96% or 31.96, which shows that they expect earnings to increase over the next year, and that's what dropped the PE significantly, almost more than twice as much. And its beta, with its beta being 1.579, it's expected to be more volatile in the market, which means it could have a higher growth rate, but it's also a little more risky. But overall, IMAX is a company that has a lot of potential for growth. So would I buy the stock myself? I would buy the stock because of its room for growth, as well as its lack of a true competitor and its best-in-class reputation. They've continued to add theaters worldwide every year and will continue to, and that will hopefully continue to raise revenue and continue to make the company money. I think they have an advantage compared to all the other competitors because of their reputation. People are going to go with IMAX over the other ones because they're established and they're the best in class. And as well, their investment in virtual reality could open up a whole other revenue stream for the company that they could take a great advantage of. Thank you, and that was my presentation for IMAX.